Hi everybody, this is Phillip Guan, CPA. Welcome to the classes to teach you how to do tax. Okay, so in my opinion, it's very fun process. So today is class number 7, lucky 7. Okay, so I'm going to bring you to review a little bit of what we learned yesterday. Okay, number 6. Number 6 is talking about. Any one of you remember the name of the number 6? I think is it?
About the rent.
Number 6. Oh, last change. I can do this. Number 6. I think this, right? Is okay. Okay. Not this, because yesterday we talked about the Schedule C. Right.
The Schedule C yesterday is the before day is Schedule E.
Yeah, Schedule C is it? Okay, hold on. Let me see. Yeah, this is Schedule C. Okay. So this is what Schedule C, and then in the Schedule C, where revenue, the original example is 250K. And there is a group of operating expenses like this. Inside this advertising, there are 3 kinds. So you list in here. So the system is going to add it up for you. Now, do you see my share screen? Do you see my share screen?
No.
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 Oh, that's why I was wonder. So remind me next time. Okay, if you don't see it. Okay. So this is Schedule C. Okay. So this operating expenses, it's revenue, operating expenses, okay, is from the part 2, from A, is under the letter A to E. See, from left to right, from top to the bottom. That's how they sequence. It's like this. You see the highlight? If you don't see anything, list from number A to number 27, 26. So you just list it in other expenses. You double click in here and you put description and total amount in here. You can put more than one in here. That's how you do it. Now, the most difficult part of this whole thing is the depreciation. So here we have an inventory, start with this, process this is an inventory. So now the depreciation comes from here, right here, the T at the form 4562, double click in here. This is they are doing a business, they bought this building or these places to do business. So it's a commercial. How much they bought for? They bought for by 350K. The building is 250K. The land is 100K. In this example, you can see it from the ratio from the property tax bill. And then because this is a commercial, so therefore in here, commercial have 2 different way of depreciation. One is 31.5, the other one is 39. Depends on different kind of commercial property. In this example, they are 31.5. Okay. And then the second one. So this is the one they bought these places back in 16. So therefore there is applied depreciation 47,628 as the price depreciation in there. So number 2 is number 2. This is all asset and has been fully depreciated. How do you know? Well, the cost is 20K. The price depreciation 20K is equal to the costs. It's fully depreciated. You still need to put it in. So the third one is the computer that also put it in last year, 2022. We are using 2023 tax software. The cost is 5,000. They are doing bonus depreciation in last year, so 5,000 has been taken. If you put in here, you don't have to put in here. They go to, so here they view, when you put in the depreciation, you'll be part of it. If you put in 2 places, you will double count it. In here, number 4 is a new laser printer in the year 2023. So, and then you can take to obvious there's no price depreciation. And you don't have any of this. The system will calculate it, what it is, how much they can have it in the current year. They could take the full amount if they choose to, as a bonus depreciation, 100%. Now, this is the parking and building improvement for 15K. You have an option to take 15K one time, or you have to take it through 15 years straight line. So if you want to use a straight line and do not want to as a special depreciation, and you have to go to the bonus depreciation, put a 0 out there. And then they will calculate it. They give you about 5,000, as I remember. Now, if you do not want to override the bonus depreciation, the system will generate the bonus depreciation at 15,000. The law since 2018 allow you to do so. So this is the color copier. You bought it in 2019, have been fully depreciated. Right here. The next one is the truck that I put this one in on top of the example. This one is not inside the example. It's Toyota truck. Let's say they do use this one to do the business. We're 80% for the business and 20% for personal. If that is the case, then you need to calculate 80% and then can take depreciation, can allow them to have a special depreciation, which is the bonus. As you can see in here, it's fine because this example doesn't have any state available yet. This Schedule C. Now in here, because I add this, may I change the example a little bit? Oh, there's a bus, which I added last night. I delete this one. Enter. So now, in this example, there's a car. We also allow bonus depreciation. We end up have a refund. Okay, today We're going to teach in class number 7. This is class number 7. Ludi, can you read this scenario for me?
Okay. In this scenario, you will practice entering the following: Form W-2 income, Schedule K-1, income from Form 1099 DIV, which is dividends, estimated tax, and overpayment.
Okay, now we are continuing to read this scenario information.
All right, scenario information, right angel is an attorney and live alone in Cambridge, Minnesota, MA.
MA, yeah.
Okay, he is the partner in his law firm. Prime number partners, right angel divorced and has no dependents. He is a United States citizen and not a qualifying child or dependent of anyone else. Right angels provided his MA a driver license. His driver license number is 123456789, issued on January 1st, 2017. It expires on January 1st, 2025. He had no interest in or authority over any foreign account and did not use virtual currency.
Thank you very much. Now we go back to here. Obviously, this is all makeup numbers. Right angel, not that I remember if there's any last name called angel. Okay, but this is the text ID. Is also make up it. So in here, I am going to open. Okay, and then in here, paste. So select, and then update it. Well, in last year tax software, I have this one. So now they update all the thing related. So I will have less typing. Pretty cool. So now I am going to do this. I'm gonna get this. Now, first thing first. This one, I'm gonna split the screen. Okay, 20, I can move around like this. It doesn't let me on. Let me get this one smaller. It doesn't let me. Sorry, it doesn't let me. Okay. Okay, good enough. Text ID is correct. Birthday, good. Attorney. Normally, you need a cell phone number, especially nowadays. You always put a cell phone number. Assuming this is a cell phone number as well. Okay. And also the software, you connect your cell phone number or paper number if you're using some function in this text software. Address. I was changing to state of California for training the state tax return last year. So let me go back to here. 02139. This is it. I can copy it. Quick click here. Delete. This. Enter. They don't have anything in here. They don't have anything in here. That's what they say. Okay. Health saving. They have it. They have but they don't have any 1099A, so that I don't have enough information to fill the 1099A. Okay, so now the ID in here. 1, 2, 3, 4, 5, 6, 7, 8. M8. Okay. The first thing first. We're good for this one. So we close this one. And then I want to see the last year there's an estimate tax. Somewhere in here there will be tells you how much estimate tax should be paid for it. There. I can actually decrease a little bit, decrease a little bit. Are you able to see it? No, 10,000 each quarter. So in here. It's 10,000, not 1,000. Okay. Last one is 2024. So the system say if there's any overpayment, apply for next year. Right here, A. You say it in here. Okay.
Is it
I make it-
2023?
I am making mistake. Yeah, I just catch it. I appreciate it.
Uh-huh.
I get used to 2022 because I just finished the 2022 and then November 16 for California. Okay, it's yeah. Thank you, appreciate it. So now we're good now. The good thing about it is once you input in here, even though you input the day long, the system doesn't count as a long. They know that is a third quarter. Okay, so now let me see the simple thing. As you can see, what's in here, the blue thing is what last year have it. So it looks like last year they have W2. Let's see. I'm talking about last year, I mean 2022 tax year. The current year is 2023 tax year. Okay, that's what when I refer to, I normally like when I say last year, last tax year. Okay. So W2, let me see. There is a W2. That's because it's an S corporation, I guess. There's a K1 there. So she's making W2 income right here. The first thing first, the EIN number. In this situation, it's just by this person as himself or herself. So it's the first one. The EIN number must be right here. The company name, address, it's correct. So the amount is 115,000. No, I make mistake. 115. Tab 25,000. So the system makes box 3 and 5 equal to the box 1. And sometimes not necessarily always the same. In this example, they are the same. So it's correct. So we are if you do not know the state tax, it's supposed to be some state tax in here. We just don't know. That's why we ignore it. Okay, here's dividend, which is the linear review. Double click in here. You're looking for the EIN number as well. It's correct. Enjoyment. It's interesting. This client is Light Angel, and then this company is Angel Investment. You see it? It's investment. It happened to be okay. Well, the account number. Okay, it's correct. The qualified dividend and ordinary dividend the same, 10,000. Rudy, how much? There's a tricky question. How much Right Angel have a dividend from Angel Investment? 10,000, 10,000 or 20,000?
10,000 to be filed.
It's 10,000, correct. So what this one mean is she have 10,000 dividend as an ordinary, all of them are qualified dividend. What's the special about qualified dividend? Qualified dividend with tax less than ordinary dividends. Okay. So, and then this person also is going to have NEC, which is Schedule C. I'm going to do that later, but I'm going to grab the K1 first, because remember, she's the partner. You see the K1 or Mr. Okay. Right? There's a K1. I want to input a K1 first because it's in the same. Let me see. So the K1 is in the second tab under income. The general tab will finish income. And in here, now, K1P stands for partnership. K1P, like here. P like Peter. P like partnership. Different kind of K1. K1F, K1S, it's different kind. In this software release, the K1 is not available yet. Do you see it? It's not available. But let me show you in the 2022. So I won't be able to show you 2023. I'm going to share screen a little bit later once I get into it. So I stop the sharing screen. So I find the example and then I will share my screen. Okay, I'm gonna share screen with you. Now, in 2022 tax return, the software in here, the partnership is in here. So you input the number like here. So this is what kind of law firm is it? They lost money. They lost 197. You see it? This is not a normal example, but let's say this is the lost money. They probably have something, whatever, a normal situation. It is a loss. Do you see the negative side right here? So in here, you are going to put in here. You're going to put a negative sign in there. But this negative sign is going to offset almost lost 100, 200K. Something must be go wrong. Okay. And then this K1 will offset other income. It shows up in the Schedule E, page 2. And they also offset the other income like W2. It shows up in here. It also goes back to here. And they offset the Schedule C as well as W2 incomes. In here, it doesn't have any. Okay. It may be better. Okay. If I put everything in the 2022 tax software for this example. But we'll finish this one. So this one, they have schedule. She's also have a 1099 besides the partnership. So this is the lawyer who have a law firm and the partnership get a W2 income and also get lost money from the partnership, almost 200K. And also on the side, there's a side job. When somebody pay him 50K. Let me see if there's any expenses in here. It normally should have some related expenses. Let me see. But it did not say anything in here, but normally have. You won't be able to see the whole real thing in the tax return in 2023 because the 2023 doesn't have a K1 there. So this is right, Angel. W2. Dividend. Get this. That's QPI in this situation without a K1. This is what without a K1 looks like. In the pay history. Now, what if we have a K1? I'm going to put all this in 2022 tax software. So you have opportunity to learn one more time. I'm going to do this whole example in 2022 tax software one more time. Do good, huh? But I'm going to do it faster. As look, I'm going to do this. Okay. This is what I do if I in my practice. Let's see how I can get this one all done. Because I'm doing 2022, I'm using 2022 tax software. I have to change everything in 2022 this time. And this example. So he first work for a company and then have his own practice and lose money. That's what it said. Okay. It's not the same. So what I mean is this lawyer first work for somebody and then start a new firm. It's called Two Brothers at Law. And they're 50-50. And they lose money. There's a second tab right here. Okay. Right here. I like 14. A. Seven. C. And cost basis. Yeah. It's 1 million there. That's W2. And then there is the QBI. The QBI need to be right here. Right here, under 20. Others. Negative 187, 0.5. 2. Okay, now this situation. I'm using the 2022 tax software. This is a W2. Oh, I need to change it. In here, you just change it to spouse and go back to the taxpayer when I go change the whole number. Did I share my screen yet?
Yes.
Okay, very good. Thank you. Okay, now this is W2. Here's W2. The example did not say this. And then there's a, but this one I have not put it in yet. There's a 50K. In this example, they did not tell you other expenses. They normally should have related expenses to generate this 50K, like car expenses, like office expenses, like other insurance, like other whatever insurance. And so if they use a home office, they can also do home office. But in this situation, assuming there's nothing, now if there's no K1, the 50K by itself, there's a self-employment tax 15.3%. There's also income tax. But in this situation, it's 50K without any deduction yet in here. Oh, there's a little bit in here. So this example. This example for last year. Okay, now. How much tax do you think this person need to pay? Judy, how much tax do you think is gonna pay?
Tax?
How much tax do you think this lawyer need to pay for this year?
We have to deduct 22. Here, you mean
There's a
it
tricky,
should,
the tricky questions. So this lawyer first worked for a law firm and get W2.
yes, and then partnership get the lost.
And then on return, and then they probably, after the law firm, they probably do an independent contractor and make 50K as a consultant, whatever law firm is that. And then they find a partner, evoke it as a partnership and lost almost 200K. So now, here's what is gonna happen. This 50K is like first as a job employee, second in independent contractor, third as a partner. That's what the year split in 3 parts. Now, this 50K normally have some expenses, but in this example doesn't provide. We'll offset by the K1 because a partnership. The partner of the partnership, the K1 is also subject to self-employment tax, but the offset status is still negative. So therefore, there are 0 self-employment tax because the offset each others. So now, and then these two add together equal to this, right? Guess where it goes? Like here. Like here. We got this from W2, we get this from dividend, we get this from the net of self-employment and the partnership losses. So therefore, for the year of 2022, in this tax example, its net loss, taxable income is 0. The tax is 0. The withholding from W2 25K. Also, they pay another 40K. That's the estimate tax. There's a 65K. So in this situation, it should have been a 65K refund. The example say just apply for next year. So how to do it? By next year, and we need to do like this. In this example, because there is no I can make this one. And then this one, you show and then tax return apply for next year is the refund. The tax software have client privacy. When you turn it on, they don't show on the information. That's good. See, look in here, in the refund in here, they go to apply for next year. It's also similar in 2023. It's going to be lower in 2024. Any question for me for this example?
I do have the question. So
Yeah.
where can you find the form to apply the refund to next year?
Okay, like here.
Yeah.
Estimate tax. Right here on the right side. The left side is what you input, what estimate tax you have been paid for. The right side is for the next year. In here, you say apply all the overpayment to next year. Like here. I choose A.
Mhm.
If I don't choose anything, there will be a refund. If I choose it, but because last year they owe nothing, I have to come here to write down at least this much estimate tax expected. Otherwise, the system say, hey, you owe nothing. You don't need to pay estimate tax, right? So therefore, because normally the law firm when it's established, it's not going to lose money all the time, right? So more likely it's going to make a quite bit profit next year. Okay. Good question. Can I answer a question?
Yes.
Okay. Any other questions? You see, I just used 15 minutes, approximately 15 minutes to finish this tax return stuff from the beginning to the ending for 2022 tax software. It doesn't take long. I train it slowly so that way you can understand it. Any other questions? No question? That's good. So if no question, I'm going to stop today's training. Okay. Okay, let me get this. Stop.